Hello, Finance for Life fans. My name is Arthur Vital, and we are back with another episode of the Finance for Life podcast. I am a high school student with an interest in the financial field and finance literacy. I started this podcast to help people gain financial knowledge and help people all around the world grasp a better understanding of the financial field. Here with me today is Mr. Chandak. He is an entrepreneur, partner, portfolio manager, and research analyst at Grana Investment Partners. Mr. Chandak is the lead portfolio manager on the small value equity strategy, a core portfolio manager on the micro cap equity strategy, and is an analyst following the financial services, energy, and technology sectors. Before we begin, I would like to thank Mr. Chandak for being on this podcast and giving up his time and expertise. Now, I will pass it on to him to introduce yourself and your field of work, and can you describe a little bit of what you do in that field?
Great. Yeah, Arthur, thank you so much. I can't believe how young you are and what you're doing. And if I go back and map my journey at your age, and I know your dad also, I can assure you, either me or your parents, we were nowhere close to what you're doing. So congratulations.
Thank you.
This is this is very exciting and inspiring at the same time. Your energy and dedication to this cause. I know how much hard you worked on this. You're so young, but you really care about this, right? And you've
Yeah.
put so much effort chasing me down and chasing a lot of other speakers down. It really shows your commitment and how much you care. So thank you for
Thank
that.
you so much.
About me, so I'm a buy-side portfolio manager. We invest our clients' money in US stock market for long term. So think of this as anti-Robin Hood, right? When I do a buy and sell the stocks in the companies that I own, right? There's no confetti, there are no claps, or there's no reward on the screen when that happens. So because we're doing it for the long term and thinking about the company, what it could be worth on a longer term time horizon. So in other words, I do what Warren Buffett does, but a millionth of the scale, or a much smaller scale. And day to day, what I'm doing is I'm reading, I'm speaking to management teams, reading just a little bit of news, but just reading a lot of sort of material, which is sort of much more primary to the company or the industry, and then just
hmm
thinking all day long. So it's not a bad gig.
Yeah. So is there like research as well that you do, researching the stocks to know which one is right to buy?
Absolutely. So me and my colleague in our firm, we're bottoms up investors.
Mhm.
So more than 60% of the day is just reading about
Yeah.
companies, the 10Ks, Qs,
Yeah.
going through the financials, looking at the peers, looking at the value chain, learning about the industry,
Mhm.
reading interviews with the experts. So it's a lot of reading and really sort of it's a bottoms up of fundamental investing.
Yeah, no, that's all really awesome. Again, that question and the next question I'm about to ask is mainly, for the viewers who don't who want to go into finance and don't know what field to go into. So my next question would be, what really, sparked your interest in joining this field? And can you share a little backstory on how you got there?
Yeah, I had a unusual path. I was a consultant, technology consultant. I went to business school at UCLA Anderson, go Bruins. And my goal was to, be one of the sort of go to one of the management consulting firms. Um, but then my finance classes, I love those classes. I felt it was very eclectic, right? You just sit there and think. You don't have to do anything. What's better than that? So I really love sort of how you approached and how multidisciplinary finance and investing was, I should say.
Mhm.
And so post MBA, right, I took a full reset to my career, and I was in my mid 30s, and the job I took, there was something a 20-year-old would do. And that's that. And then, I stayed with it. And, that's the
Yeah.
beauty of America is if you stay with it, right? If you dedicate and you care and you put an
Mhm.
effort, something will work out. You just have to stay with
Yeah.
it.
Yeah.
That's been my story. And the question around what skills or qualifications would help somebody. Um, I put sort of three important things in there.
Mm,
Curiosity, right? You want to be curious about everything around you. As I mentioned, this is a very multidisciplinary field. So you go to a grocery store, right? Or what are kids drinking these days, right? Or what are the high schoolers or teenagers drinking?
mm,
Drinking coffee, or you go to Starbucks, or you go to somewhere else, right? At the Starbucks, right? How do they sort of have the stuff at the front, right? The
mm.
gum you buy or the water bottle you buy, right? And how they make more money on it, right? Like just observing things like how it's on the shelf.
Yeah.
And so all it's just the curiosity on day-to-day life, right? And it's just there's just ample, unlimited opportunities. So
Hmm.
I put curiosity as the number one thing.
Yeah.
And the second thing would be confusion endurance, right? So in other words, like it's when everything is clear as a mud, right? Are you comfortable with it, right?
Hmm.
Like because life is in gray area, right? Nothing is black and white. And investing is even more in the gray area, right? Like you listen to somebody on CNBC and somebody will tell you why Tesla is the best stock in the world, right? And
Hmm.
then you listen to another expert who will have compelling reason why Tesla is the worst stock in the world, right? This is not my recommendation. I'm making an example.
Yeah.
I don't want either Tesla fans, either direction to take this personally, right? But my point is, you could have two experts give you very compelling reason why a stock is a buy, and an equally compelling reason why a stock is a sell, right?
Mm,
So what do you do, right? And that's what makes the market. So there's something about confusion endurance, right? Being able to sit with uncertainty and be
mm,
comfortable with it. That's very important. And third thing, and this is probably the most important thing, is risk taking.
mm.
Just take chances, right? Almost in all cases. And I have to be careful telling a teenager about risk taking, right? Usually teenagers already take too much risk, right? And it's not your fault, it's the brain. Um, but in general in life, right? You want to take risk,
Mm,
obviously be aware of it, right? Of the losses, right? But if the maximum loss in whatever you're doing, if you could, if you think you can handle it, right? Always take a chance. And that's why something beautiful will come out on the other side of it. So
yeah.
curiosity, confusion endurance, and risk taking.
Hmm. That's all amazing. First thing I wanted to say was actually when you said that, you switched majors. So one thing I would like to say is, when you what something I believe in is, when you grow older, when you do job, when you get out of college, you always should do what you love. Otherwise, it can get very repetitive, it can get very boring. And then another thing I wanted to say was curiosity. One thing I like to think is, without curiosity, there really isn't no like new innovation, new ideas, new thinking. The only way to really gain all of that is by being curious about other things. And so I think you should always, like you said, risk taking, you should take chances, but also, calculate the losses just in case and put yourself out there. And so, but the next thing I wanted to ask was, what are some key skills or qualifications that really helped you advance in your career?
Yeah. The same three things I mentioned about.
Mhm.
And then if somebody's interested in finance or investing, the best thing to do is invest real money, right? Do
Mhm.
it in small amounts because at the beginning of your journey, the real earnings are in terms of lessons and not real dollars.
Mhm.
So it's the money, how much it goes up, right? That's less important. What's more important is you made a lot of money or you lost a lot of money, right?
Mhm.
Made a lot of money, that'll reinforce, you learn something and that'll reinforce.
Yeah.
You lost a lot of money or some money, that'll reinforce even better.
Mhm.
But the key is to be in the arena and actually play.
Yeah, because without being in the arena, you can never really learn. Even if you do make a mistake, you'll never learn from that mistake without putting yourself out there. And so the next question is actually more related to investing, and it's how should someone approach investing during a volatile market?
Yeah, so there's things you do, and it's equally important things you don't do. The
Mm-hmm.
things you want to do is you want to own the good company, and you want to be patient, which is asking a lot of a high schooler or a teenager, but that's important. And second thing, even more important, is what you don't do. Don't own meme stocks. Just if something is hot on Twitter or Reddit, just avoid it, right? It's almost always ends in the pain.
Yeah. So, like you said, patience. I know some people actually that are also high schoolers, and what they do, they think they can just put a lot of money in one stock, wait for it to go up one day, and then take it all out. So I would say definitely long term is definitely better. And you can also get compounded interest off of that. So, it'll really just help your money over time. And so that leads me to my next question, which is what advice would you give to people who just started earning money on really how to build your portfolio? Like, should they diversify? Should they do that? Should they do this, etc.?
Yeah, yeah. So, so two-part question. One is two-part answer. One is the first thing I think more important is like make more money, right? Like just have that approach or attitude to life that hey, I could do something more, I can ask for more, right? Or I can try something else, right? I
Mm-hmm.
think that approach is very important, and that ties into as much as you're focusing on saving, right? Also
Mm-hmm.
focus on how do I make more, right? I mean, it sounds very simple, but a lot of times you're in a career or a job and you just take it for granted, right? And you're just going through it. And every day you're more focused on executing what you're supposed to do, right? But not sort of really step back and see like, oh, what else can I do? Or can I
Yeah.
do this somewhere else? Or can I do it differently?
Mm-hmm.
And so I think just focusing on how do I make more, right? That's
Yeah.
very Americana capitalism. I think that's always good. And in terms of investments, if you're young, I would recommend investing in some sort of ETF or some other
Mm-hmm.
really good active manager you trust. Uh,
Mm-hmm.
And generally, if you're young, you want to focus in sort of more growth-oriented companies. So NASDAQ, QQQ, that's probably a good example of
Mm-hmm.
where to invest and let that money go. And
Yeah.
if you think you really enjoy investing in stocks, right, then keep aside a small portion of it, right, that you invest that money uh, in individual stocks. That's something that right, something that you come across and something that makes sense to you, right?
Mm-hmm.
But that small piece that you're allocating for your personal investments, right? Remember, your reward will come through money growing and also intangibles, like really enjoying the process, right? And maybe you have an edge, right? Because you have a better understanding of the industry. So, but that for that small piece, just also be ready to lose all that money, and that's okay, right? As long as it's an informed choice, and just for the majority of your money, right, invest in an active fund you trust, or just stay with ETF
Mm-hmm.
and something in the growth oriented area.
Yeah. So would you say, this leads me to my next question. Would you say, is it when someone first starts investing, you said take the risk, put your money in, get ready to lose it. But would you also say, is it worth it to take a risk and do short-term investing, or you think you should play it safe and do more long-term investing? Or like, what are the pros and cons of each side?
Right, right. So if you're in the business of managing money, then there's like there are so many different ways. What we say, like there are many ways to get to heaven. Like, whatever works for you, right? But for somebody who's not in the industry, I would say long term is what really works, right? That's what really pays off. Long term is what pays off to the companies, and long term is what pays off to the investors
Mm-hmm.
and the employees also. However, also we're humans, right? We all like to believe we're better than markets and we're better than everybody else, right?
Yeah.
And I don't criticize that flaw, right? And that, if I may even call it as a flaw, right? That overestimation of your own ability,
Mm-hmm.
as much as it's considered as a negative, in my mind, it's also a huge positive, right? Just the
Mm-hmm.
fact that you're overestimated yourself, you take on so much more. And
Yeah.
even if you will fall short of whatever you think your ultimate potential is, right? You've
Mm-hmm.
done way more than if you were really rational about your potential, what you
Yeah.
could have done. So,
Yeah.
so it's very important. So I think everyone has that. A lot of people have that itch. I think
Mm-hmm.
it's very important to scratch that itch of short-term investing. Right?
Mm-hmm.
Do a little bit, right? Do a little
Yeah.
bit if the time and the money permits you. Do a little bit so you scratch the itch, and then that way, once you scratch the itch, then you're more focused on just doing long term. But in the long term investing is what works for the companies and the investors and the employees also, all the
Yeah.
stakeholders.
So relating to long term, there's actually someone that teaches finance. His name is Dave Ramsey. He teaches personal finance, and one thing he says is money equals time. As you go, as you invest, you stick to one stock or stick to stocks, and then as you invest over time, you gain compounded interest. And he actually said if you invest like $20,000 today in S&P 500, it has like a average like 10% rate of return each year. You can earn almost $2 million in 50 years. So it's really just about time and compound interest. But I also like what you said about short term. I've actually never heard that before. Usually people say it's bad, but I like that because you scratch the edge, you get confidence, you put yourself out there, and then you can achieve more than you were predicting in the first place.
Right. Actually, Arthur, my ultimate conclusion, or what I was trying to drive at, is
Mm,
do the short term to personally experience that it doesn't work,
yeah,
right? And then you won't get distracted.
yeah, that's
So do it a little bit, right? Just get over it, right?
yeah.
You'll feel some pain, and then you're like, okay, I don't want to look at it again. Just put your money in S&P 500 or QQQ. If you're young, I prefer higher growth, right? Just
Yeah,
let it do the magic, right?
yeah.
But if you scratch the itch, then you won't get distracted,
Mm-hmm.
because now you hear about Nvidia, right?
Mm-hmm.
And some time ago, it was SPACs, like only 3 years ago, right? Which
Yeah.
we knew it's full of crap, right? People who are in the industry. And before that, um, it was something else, and before that, it was housing, right? So there will always be something happening over your life, right, which could bring back that itch.
Mm-hmm.
Oh, I want to try this, right? So it's better to scratch that off, so you can really, your likelihood of getting distracted is much lower in that way.
Yeah, yeah. No, that's a really good take. And kind of relating to short-term investing, that leads me to what I was going to ask next, which is what are some common mistakes people make when investing? Or are there like any tips to, avoid those mistakes?
Yeah. So the first thing I would say is, if you're doing short term, a lot of people get caught into this shorting stocks, right? And shorting stocks because of valuation of high growth companies,
Hmm.
right? And their analysis might be right, right? So, but you got to figure out, do you want to be smart or you want to make money?
Yeah.
Because these are different vectors. Either you could be right and lose money, or you could understand it and not bet against it, right? But
Hmm.
even more importantly, I think the biggest side effect of being short high quality, high growth companies because they're expensive is you also become very skeptical in life,
Hmm.
right? And that's a terrible way of living life, right? Unless you're really predisposed, right? There are rewards for being highly skeptic, right? There are some parts of the job, the economy, and the whole world's the wheels, right? being skeptic is important. That's an important role, right?
Mhm.
But unless you're predisposed to being skeptic and you want to deploy that superpower, right, which is a very small sliver of people,
Mhm.
most people will benefit by being optimistic
Yeah.
and being positive about life and being growth oriented. But if you start shorting stocks, that gets in your way, right? You become questioning everything. Like
Yeah.
not worrying about like, oh, there's all this AI capex, right? The
Mhm.
Gen AI capex, is it going to pay off, right? Is there a return on it? That's a hard debate, right?
Mhm.
But that skepticism, I mean, that's the right question to ask, and that's the right discussion to have. But if you focus, if you get caught up and if you anchor yourself too much on that question, right? Then you're losing your sight from how disruptive this could be in sort of 3, 5, 10, 20 years in life, right?
Yeah.
But that's a far more important questions to focus on from my perspective than, hey, is there a near-term return on it, right? That's an example of if you're short on good companies, right? It just makes you skeptical. I think it just messes with your mind.
Yeah.
So
No,
that's
fair.
one thing I highly recommend people to avoid.
Mhm.
The other mistakes are um, you know, people are too focused on paper losses, right? And I can understand, right? Let's say if you put in $10,000, right? And now it shows 7,000, and you think about 3,000, and you think about, hey, this could have been my vacation, or I could have gone on a cruise, right? So
Yeah.
these are all very rational thoughts if you look at it from that prism, right?
Mhm.
And what ends up happening is people do not invest because of that effect, either fear of it or actually experiencing it on paper.
Yeah.
But what really pays off is like there's no free lunch, right? So if you're willing to be patient and sit through it and not worry about it, right? In
Mhm.
3 years, 5, 7, 10 years, right? There are huge rewards.
Yeah.
So that's very important to avoid paper losses. So those
Mhm.
two things I would say. A, don't worry about paper losses. Invest in index fund or high quality, high growth companies and let it do the magic.
Mhm.
Second thing is if you're doing short term, don't try to avoid the short term shorting stocks of good companies for valuation reasons.
Yeah, no, for sure. I think, like you said, being optimistic is definitely way better than being skeptical. And so I also wanted to ask, is it better to invest in index funds such as S&P 500 or single stocks such as Nvidia? Because, Nvidia over the last few years has been rising a lot. Microchips relates to AI, which has also been a like huge thing in today's society. So which one would you say is better to invest in?
In general, I say you invest in an index fund and
Mm-hmm.
then invest in a fund which has a very high weight of the stock you like, right? So instead of Nvidia, you could own like a QQQ, for example, right?
Mm-hmm.
Which is NASDAQ. A very large percent of it is in those FANG companies. Or you could invest in like an index fund related to semiconductor, right? That's
Mm-hmm.
another way to do it. But like if you have a strong edge, you know, invest a little bit in a small, like,
Yeah.
few stocks, right? But real companies, right? Not like something you read on like Reddit, right? Like
Yeah. Yeah.
again, like
So
if I mention GameStop, I'll be in trouble. But at least this podcast will blow up just because it's like GameStop. So
yeah.
don't do that stuff. Yeah.
So relating to like I guess society today, AI has been on the rise, technology has been on the rise. How do you think that how do you think that would impact your sector?
Yeah. So let me answer it two ways. What it does to my sector, and then what does that mean for somebody like you, your audience, and everybody else, right? All of the humanity. So for our sector, if you remember at the beginning, I said all day I do is I read and think.
Yeah.
So what Gen AI does, and we're playing a lot of with this inside our firm is now I can read a lot more, right? I can feed a lot of documents
Yeah.
to chat GPT or cloud or whatever your pick is, right? And it can summarize it in context, right?
Yeah.
So which makes that means I can read a lot more.
Yeah.
So my job is sort of changing in terms of now my ability to synthesize information, right, and prioritize things real time is way more important because I
Yeah.
can digest so much more. And I also, as this matures, right, the industry will figure out how to draw connections that human mind doesn't, right?
Yeah.
Because what happens is the human brain has all these sort of we're connecting the dots, right? We're connecting the dots in the way that we have understood the world, right?
Mm-hmm.
But one of the things that AI does is you can feed it everything, right? And it'll randomly try to connect all the dots.
Yeah.
So you could have two things, they're completely in different contexts, right? And and AI can make those connections. So the ability to connect sort of dots and find these unusual connections
Mm-hmm.
is that potential is very high with AI. And we're
Yeah.
just at such a beginning stages of it. So we'll see how that goes. It's somewhere down the line.
Mm-hmm. And in
Uh,
general, I would say it just makes things very more effective. Like even in school, a lot of teachers actually encourage us to use AI. Obviously not to cheat or anything, but they encourage us, because AI, it just gives different insight. It gives multiple different perspectives, puts in one paragraph, and it just, I guess, gives you different ideas, makes you think in different ways. So that in that way, I think I agree with you. It's very helpful. And so the last thing I wanted to ask to finish it up is just what is one last piece of advice you would give everyone watching on, how to be successful with their money, how to use it wisely and not be a fool with your money.
yeah. So number one, make more. Think about how you can make more.
Mm-hmm.
And second, save. Don't take loans that are sort of putting you in debt and putting in the virtuous cycle. And then invest, right? And if you're young, invest in growth related indexes.
Yeah.
Don't look at paper losses. And
Mm-hmm.
I think the last thought I want to leave you and the audience with is if you're young, in my mind, the only thing today, this is probably the most important thing I'm saying on the podcast for a young person. The only thing worth working on today is related to AI and Gen AI and machine learning.
Yeah.
Okay. Everything else, including what I do
Mm-hmm.
over the next 20, 30, 40 years is is going to be on a declining relevance.
Yeah.
Okay. So just put all your energy into it. And you said at the somewhere at the beginning of the podcast that which was very insightful. You said it's important to do something you love, right? Because
Mm-hmm.
you'll be doing all your life. I think there's a important aspect of what you love and is it growing?
Yeah.
That's very, very important, right? You want to be very careful and purposefully focused that you want to do what you love, and you
Mm-hmm.
also want to do it in the area that's it's growing, right? And that means you might have to find a little bit of adjacency, right?
Mm-hmm.
Or you might have to take your skill and work in the industry that's growing. But
Yeah.
but but that's very important, right? But like let's say if you're really good at making like wooden wheels, right? Like a buggy whips,
Mm-hmm.
or you're making buggy whips, right? And you're great at it and you love it, right? But if that industry is going away, right, it doesn't matter how great you are.
Yeah.
But instead of making buggy whips, you could say like, okay, I'm good at working with leather, right? And maybe I'll make handbags or something else, right? So it's extremely important to pick a field that's growing and have that cross section of what you love, and that's a growing field. Right?
Yeah, I know, definitely. You have to, I guess find that balance between the two, what you love, what you're growing. And that actually finishes up. That was the last question. So I wanted to thank you, Mr. Chandak, for your valuable time, sharing your knowledge. I myself learned so much from this podcast, so I can't help, this will help all the viewers around the world, all the high schoolers that are watching. And especially I liked when you said, curiosity, and you said, putting yourself out there And one thing I really liked was, scratching the edge on the short-term investing. So it's not a disturbance anymore. So you know not to do that again, and you learn from your mistakes. And so I think this was definitely help out my podcast and all the people willing to gain literacy in the financial world. I really appreciate everything, and I want to thank you again for your time. And I hope you guys watching also have learned a lot from this podcast.
Great. Hey, one last thing I want to say is you're doing an incredible job. I know how much you care for this.
Thank you.
And my son, he'll hate that I'm plugging him into this. Ayan, he just started high school, and I look at what he's doing and what you're doing, and your young generation, you guys are so at a time. You guys are so dedicated. All of this inspires me. And go see Kings. That's a Palos Verdes High School. Thank you so much.
Thank you so much. Subscribe for more.